Good morning. My name is Miguel Gonzalez, and I'm a retirement specialist with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about the differences between the traditional and Roth 401k. While the federal government has created a number of tax-advantaged savings accounts designed to help lower and middle-income workers save for retirement, these plans tend to be less useful for employees earning larger salaries. But highly compensated individuals currently not permitted to contribute to Roth IRAs or younger workers expecting to be in a higher tax brackets when they retire stand to benefit when companies offer their employees the option of contributing after-tax dollars to a type of plan called the Roth 401k. As the name suggests, the Roth 401k incorporates elements of both traditional 401k plans and Roth IRAs. Included in the Economic Growth and Tax Relief Reconciliation Act of 2001, the Roth 401k allows workers to make Roth IRA type contributions to 401k plans, but without the income restrictions and contribution limits that apply to Roth IRAs. Contribution guidelines. Contributions to a Roth IRA are non-deductible, but earnings accumulate tax-free, and qualifying distributions are also tax-free. Currently, only taxpayers whose adjusted gross income falls below certain levels, $139,000 a year for a single filer or $206,000 for joint filers, are eligible to contribute after-tax dollars to a Roth IRA. These income limits do not apply to Roth 401ks. Workers will also have the opportunity to save far more money in their new accounts than they could in Roth IRAs. The 2021 annual contribution limits for IRAs of all kinds was set at $6,000 for taxpayers under the age of 50 years old and $7,000 for older workers. The Roth 401k, in contrast, will be subject to more generous elective salary deferral limits that apply to conventional 401ks, $19,500 for taxpayers under the age of 50 and $26,000 for older workers. A few considerations. The Roth 401k has other advantages over the Roth IRA. Contributions are made through payroll deduction rather than through separate arrangements with a bank. Because these plans are administered by employers, contributing to them should be more convenient for workers than opening up an IRA. An employee who is currently contributing to a traditional 401k plan could, for example, simply opt out of his or her contributions diverted to a Roth conversion of the same plan. Lawmakers have stipulated, however, that matching contributions made by employers must be invested in a traditional 401k, not a Roth account. This means that even if employees make all their contributions exclusive to the Roth 401k account, they will still owe taxes in retirement on withdrawals from funds contributed on a pre-tax basis by their employers. Workers should also be aware that a 401k annual deferral limits apply to all 401k contributions, regardless of whether they're made on a pre-tax or after-tax basis. If employees contribute to a Roth 401k, they may have to reduce or discontinue their contributions to their employer's conventional 401k plan to avoid exceeding these limits. Provided employees comply with these limits, however, they're allowed to put money into both types of 401k plans. In addition, employees considering the Roth 401k option should know that, like the 401k, but unlike the Roth IRA, the Roth 401k will require them to begin taking withdrawals after age 72. That distribution age is 70 and a half if you reach that age by January 2020. If you're still working at age 70 and a half, you don't have to take your required minimum distributions, RMDs, from the account of the employer which you currently work. On the other hand, the Roth 401k resembles the Roth IRA in that investors will not be permitted to withdraw their money tax-free until they've held the account for at least 5 years and are at least 59 and a half years old. The later provision could make the Roth 401k less attractive to employees who are currently approaching retirement. Talk to your financial professional or contact us at Cortburg Retirement Advisors to see if the Roth 401k might be appropriate for you. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.